Thank you. Send it all through.
I will. I'll send it to you so then you can do it.
Yep.
On Messenger?
Yeah, Messenger's fine.
Yep.
Okay. Let's hope technology on the other side of the world works, which I'm sure it will. Babe, how you doing? Okay. Jody, how are you, sweetheart? How you doing?
A good angle.
How are you?
You can't get a good angle.
No.
Oh, make sure you get. Look, my left side, Maria, is always better than my right side. And how's everyone doing? And we have Amanda Wilson who's joined us. Very good. And how is the marketplace? So, George, you've seen a bit more activity in the marketplace?
It's been really good, Menos.
Yeah.
There's good prices. I mean, the listings are low. They're not as good as what they... But I expect them to start coming in. I've had a lot of appraisals this month. I've had more appraisals this week than what I've done all year, just back to back. I've got to leave early today at 5 o'clock to do another appraisal, so I've had 3 today.
Yeah, well, that's good. That's really good.
Yeah.
Yeah. Yeah, and you'll find as the weeks follow through, and look, everyone's going to be talking about another interest rate cut in July, August, so in another 2 months. So it'll be really interesting. That will really open up the floodgates for an amazing September and spring season.
Yeah, you'd hope so.
On the investors front, Jody, how are you finding things?
Good. The market has quietened down a little bit in Victoria, that we're finding. We're not getting as good quality applications through and finding it really hard to get people through the opens at the moment.
Really?
Yeah, really struggling. It's just taken 40 days to rent a property that has nothing wrong with it other than just couldn't get anyone through it in Donnybrook. So, yeah, otherwise, Queensland is still good.
Yeah. Well, that's interesting to sort of see because there was indications there's been an easing in the rental market from a demand point of view. And there was an article I read last week. I'm thinking it's just interesting how the tide can change. And I think for those that have just joined us now, I think we need to be really aware that the speed of change is becoming more evident, right? So when the market feels confident, you see things really speed up. When there's a bit of negativity, you see the market really slowing down. We have access to all this information instantly, and people are making obviously decisions, and their motivation is changing far more rapidly than in the past. So, you know, we see these dramatic curves, ups and downs in a very short period of time. We've been talking about it for some time now, and that's not likely to change. Hi, David. How you doing? I hope you had a great time away.
Yeah, going well, mate. How are you going?
Yeah, fantastic. Yeah, really well.
That's right.
Yeah, really good. We're here in Thessalonica now. We had a bit of we got here finally after a couple of delayed flights. Got in at 2:30 in the morning. It's 9 o'clock in the morning here. Hi, Emma. How are you, sweetheart?
So life's good in paradise?
Life is always good in paradise. And I was just talking with obviously our presenters a little bit earlier on, and just commenting on how lucky we are to be living in this day and age, to be able, you know, we've got people in Queensland, New South Wales, we've got them in Victoria, we've got them in Western Australia, Queensland, like everywhere. And we're here in Thessalonica. We'll have people probably tuning in from our Greece team and our Zebra team in Turkey, our Philippines team. Like, it's global, isn't it? So it's amazing what we can do. But we're just talking, David, about the market at the moment, and obviously with the good news with the interest rate dropping again this week. Have you seen an instant reaction to buyer inquiry increasing?
I think we've seen one since the last interest rate drop. So we're just talking about this morning's sales meeting that we're really keen to see things are starting to, the numbers are ticking over. The price that is selling is still down a bit. So, but anything under $1 million really is, that's our bread and butter. So that's what we're trying to chase at the moment to get that moving.
Yeah.
We're still selling a few in the upper end, but nowhere near as many.
Yeah, so it's look, the lower end, we're going to get the investors coming back into the market, and we're definitely going to see obviously the first home buyers come into the market as well as affordability, and more so confidence, because obviously we hit that peak with the interest rate rises, and now we've seen 2 successive drops. So it's a good sign for those people who want to be active in the marketplace. But we're welcoming a few people. We've just clocked over 4 o'clock, and we're getting a few people on. So what I'll do, I'll just get straight into the presentation, because I know we're nearing the end of the day and a lot of people are probably wanting to, let me just slideshow beginning. And I really should share my screen first. As soon as I find my Zoom. And a sec, share. Share. Everyone can see that? Give me the thumbs up. Great.
Yeah.
Fantastic. Awesome. All right. Okay, I'll put the chat to the side. And we're ready to rock and roll. Okay. All right, team, we've got a few people on at the moment. First of all, I want to say thank you for everyone for joining in today. Really looking forward to today's training session. One of our first leadership sessions. Obviously, volume is vanity, profit is sanity, end of financial year must-dos. So it's going to be informative, and we're going to get straight into it. So, and as soon as and there we go. Okay, so again, it's May's session, being the end of financial year. Must-dos, a big thank you to our industry partners. As always, Black Salt cannot be presented, guys, without the support of so many of our supporters. So a big thank you to everyone, to our industry partners. Just a quick one, just a reminder that Black Salt, for all our members, Black Salt's AI coach is out. If you're not using it, you should be using it. It's your training on demand. You might get me as the AI voice all the time. So, and of course,
you've got Manos in your pocket.
You've got Manos in your pocket. So I know we've been getting some really good feedback with regard to those people that are using it. So a big shout out to those that are, and obviously giving us the feedback from it. So it's part of everyone's membership. So please get access. If you don't have access to it, please reach out to our team. I'll make some introductions in a moment. And just remember, guys, all these sessions are available on your Black Salt portal. So make sure, if you haven't been and logged onto the portal, all the recorded sessions are there, the transcriptions are there, all the PDFs, the workbooks, everything. And of course, these workbooks have been absolutely invaluable. Make sure that you've downloaded it. I've been doing a couple of coaching sessions with a number of people from our team. Can I highly recommend, if you haven't done this, is to allocate a couple of hours, after hours, and pull out your books and read them cover to cover. I had one of our team do that, and they wrote so many notes and they got so much out of reading it cover to cover, because there's so much that we cover off on during these sessions, but all the information are on these workbooks, and you can download it. If you don't print it off, you can still read it off a PDF format. So get access to it. It should take you no more than a couple of hours, maybe an hour, hour and a half, to go through every one of those workbooks. And most importantly, to be able to tick off a couple of the 1%ers that you may be missing out on. So if you haven't done that, please do so. Okay, so today's session, guys, as I mentioned, I want to welcome to today's session Rafi Shalmelian from Lombardi Partners, Rose Ratner from Beyond Figures Bookkeeping, and of course, our beautiful Fiona Blaney from Real Plus, who gives up so much of her time to support the Black Salt, especially at the conferences as well. So really, really big. And I know she's got a big week this week, which is coming up to ARIC. And I know a lot of people are attending ARIC. Just quick, who's attending ARIC? If you are, just put it in the chat box. It'd be really good to see who is actually going to be at ARIC. I mean, obviously, a big lineup again, as they always do at ARIC this Sunday and Monday. I know our very own Joe and Jody, you're going to ARIC. Yep, I can see the head shake.
Yep.
Yeah.
And I'm also going to the leader conference.
Fantastic. Yeah. Team, I can't look, you know me, I'm really big on training. Speaking to one of our team members last week, and you know, training, we should all have that attitude of perpetual training, that attitude of always wanting to learn. And in this industry, there is nothing we can't learn and improve on, and always sharpening the saw. As we all know, it's so important. But I'm going to get straight into it. So let's go. So today's session, first of all, a disclaimer. I'm not an accountant. We have got an accountant here. We have obviously our bookkeeper, and they'll be able to provide you some information. But my information is just general information. It's personal financial advice. It should not be prepared with, it says, you need, before acting on any of the information, you should seek appropriate legal, tax, or other professional advice. So big disclaimer that I'm personally not giving you any financial advice, because we're breaking a few laws. I'm pretty sure, Rafi and Rose, if I do that. But again, it's some basic stuff that we're going to be talking about, but some really, really good information that can help you in your business. Okay, moving forward. So I'm just going to shift this out of the way. I've only got one screen today. Okay. Just 1 second. All right. All right, team. Now, this is one of my favorite sayings, right? If you have to wait for your accountant to let you know you're in profit, it's absolutely too late. As business owners, as professional salespeople running your own businesses and property management and sales agents, and obviously your own directors, EBU, there's some fundamentals that you need to understand. Number one, we're in a business that writes money. We make a sale today, but we don't get paid for at least 30 to 60 days. The good thing is we're high volume and also high gross margins in our transactions. But having said that, the biggest challenge we have is managing when do we actually make a profit in our business. So what I really need everyone to understand, and everyone, whoever does any business planning with me, the first thing I always say to people is understand what your fixed expenses are. Fixed versus variable. Fixed is obviously whether you make a sale or not, and whether it's your rent, your employees, your electricity, your internet costs, whatever it is, you're going to have to pay those bills regardless of if you make a sale or not. And of course, you have your variable costs, which are variable based on the number of transactions. It could be client gifts, it could be the marketing that you do for particular properties, and so forth. So you need to know what your monthly fixed expenses are, right? Absolute must. It should be your number one priority. Then there's the break-even point. You need to know as a sales agent and also in property management, when do you achieve your break-even point in your business? And that, for some people, it varies. Sometimes it could be as low as 20,000 in sales. Sometimes it can actually be a lot higher. Our business, for example, our break-even point is in the hundreds of thousands of dollars. So we need to know when do we achieve that break-even point. And there's a story I always say, and we learned it from when we had our hospitality business. So our hospitality business, when we used to run it, we used to say, okay, we had certain volume to achieve in a certain week. And we worked out what our fixed expenses were. We worked out what our payroll was and so forth. And we used to work on a 7-day running total of sales. And I remember it quite vividly. Break-even point was normally at about lunchtime on a Saturday. Do you remember that, George? Yeah, we've got the thumbs up.
Yes, man. It's Saturday afternoon, and when it came early on a Friday, it was going to be a good week.
It was going to be a really good week, and we couldn't wait for a big weekend. As soon as we hit our break-even point, we knew we're at what we call dollar for dollar. You can do the same thing in sales, right? The same thing in sales, and of course, prop management's even easier because you've got that consistent recurring revenue. Understand what your break-even point is, including a fair profit margin. The other essential that you need to be talking about end of financial year essentials is operating in code red. And what I mean by that is always reviewing your business. Are you running lean or are you running fat? And I find it surprising sometimes that most people start cutting their fixed expenses as soon as sales go down. And it perplexes me. I'm thinking, but when sales are up and the volume's there and the profit's really, really good, mate, cutting those expenses that are fat is just bottom line. So we shouldn't wait for financial strife to hit us before we're operating in code red. I always believe that we should be operating in code red consistently in our business and understanding where our profit is coming from. And of course, cash is king. The cash flow analysis. Everyone needs to understand there is a big difference between profit and cash flow. And cash flow is the oxygen of every single business. And we've seen profitable businesses struggle because their cash flow hasn't been managed well. And sometimes we're spending a lot more before we were receiving the income. So we need to manage our cash flow. And of course, that's where your accountants and your bookkeepers can come in handy to give you a really good understanding of your cash flow. But as I've always said, as business owners, we need to be self-accountable to our accounting and of course the numbers. We can't bury our head in the sand and say we're outsourcing it to our professionals. You need to have a robust understanding of these fundamentals. And of course, what do we do? What should we be doing for end of financial year must-dos? And this is what we do. I always use the end of financial year as a review, a reset, and of course, a relaunch. It's obviously the financial year. It's our tax year. It's our obligation to the ATO and of course our financials. So a review, reset and relaunch, the perfect time is to do it at the end of each financial year. Well, and actually well before the end of the financial year. Don't wait for the end of financial year to cross over before you do the review. And there's going to be some fantastic tips from both Rose and Rafi who will just share, be prepared so you can actually save some obviously tax obligations and obviously as the term sometimes kick the bucket down the road. So we don't have to, we can delay some tax payments. And of course, when we review our business, we need to review what worked and what didn't. And more particularly, the return on investment. And everyone understands, those people that work with me, I need to see there's a return on investment for every expense that we make in our business, from the marketing that we do, the advertising that we do, from our employee, our labor costs, our fixed overheads, our staffing costs, our business costs in regards to premises costs. So really look at the return on investment that every particular cost in your business is bringing you. And of course, as I've always said, volume is vanity, profit is sanity. How much profit are we on track to make for the financial year? Okay. And this is a really big one. Now, I can say hand on heart that profit is so different between one business and another business, right? A larger business has a lower profit margin. It may make more profit than a smaller business because of its turnover, but the percentage on turnover, on revenue, is normally a lot lower, okay? And correct me if I'm wrong, Rafi, most businesses, a good profit margin in the business when it's run correctly and taking wages into account for the business owners is usually running in the real estate industry is around 15%. The average runs between 11% right up to about 18%. And of course, the solo operators with a couple of PAs and what we focus on being the directors EBU, they're the big ones. Like they're making a really high profit margin. So understanding how much profit your business is actually making and benchmarking it against the industry. So when you do see your profit at say 15%, when you allocate it correctly, don't think that you're under performing compared to the industry. And the reason I say compare it to the industry because everything, water finds its balance out there in the marketplace. And in every industry, there's very few businesses that actually make more than a 20% profit because of market forces. And of course, whenever we talk about profit, I always like people to start thinking and reflecting on the work-life balance too, because it's not always about the work. And sometimes we always talk about profit in dollars, but also look at profit in regards to the lifestyle that your business is giving you and providing you and how much work-life balance it's providing you. So sometimes we put on team members and grow our business, not so much to make more profit, but to free up more of our time. Okay, so that is really, really, really important. Okay, so I'm going to get straight over to Rose. Rose. Hi, Rose. How are we?
Hello, good, thank you. And you?
Rose, do you want to just do a quick introduction of yourself? Obviously,
Yes.
you're our Beyond Figures bookkeeping go-to person who does all
Yes.
our bookkeeping. So over to you.
Afternoon, everyone. My name is Rose. I'm from Beyond Figures, 9 years now. So I'm very, very proud to be looking after all the real estate agents that connected today. And every year, Manos and I, we do this exercise where we try to come on board and try and show you what are the to-dos, what are the things that actually make things easier for all of you, because some of you do look after your books yourselves, and most of you have people like me, bookkeepers, that help you out. So there's an endless list of things that you do every day today for bookkeeping. And then there's the nitty-gritty, because you have to answer to the likes of Rafi, who likes a really good file, a very neat file, because obviously then it makes life easier for the owner. Ultimately, we all work for the business owner, and for them to be aware of what's happening in their books, and obviously be able to do, Rafi will talk about that in a minute, about tax planning. So yeah, so we can go to the next slide, Manos.
Yeah, absolutely. And can I just say, team, having a professional bookkeeper look after you, it's more than them just doing invoicing, right? There is just so much more, and I love your business name, Rose, Beyond Figures, right? Because it seriously is beyond figures. There is so much more, and the complexities that go to from a compliance point of view now, what's deductible, what isn't deductible. You need to have a bookkeeper to be reviewing, because it's going to save you money, and most importantly, stress and heartache, and avoiding mistakes that you could face. Obviously some challenges, but yeah, over to you, Rose. Obviously you've got a really short checklist for pre-end of financial year checklist, because it's important to be doing it before the 30th of June. And why is it important to do it before the 30th of June in the first instance?
I guess it's important so that if there's anything that needs to be done via the bank, it needs to be done before that 30th of June. Because if you've missed the boat, if you do the 1st of July, it will be in the next financial year. So my team here starts working on end of financial year in the month of March. This is how far back we have to start. The ATO compliance has ramped up drastically in the last 2 years. A bookkeeper role is not simply to come in and do your books and you are done. They've increased the scope of work of a bookkeeper because they saw that accountants were actually having a huge amount of work to do themselves. So the Tax Practitioner Board has reached out to all bookkeepers and asked us to do more to help this industry that's finding it difficult to find accountants. So in that same token, my bookkeepers start working in the month of March. And the list below is the things we tackle. I will go into more detail now, but it's important for me to, at June 30, when I'm ticking off those balances, that I'm happy to go, yep, great work. As you know, Manos, I've been audited a few times. And I did very well in that, in the sense that I tick all those checklists and I make sure that we're quite very well aware of those things we need to do. We work with the likes of Rafi, who's a very good accountant, who refers us, who looks after us and make sure we do the good work. So let's start. First thing that we do, and depends, if you're busy, you don't have to start from March, but we look after many, many clients. So we don't want to wait to the last minute. You have to check your bank and credit cards. So what happens is 90% of the Victorian population or Queensland or anything actually love Xero, but there are other software out there like Mob and QuickBooks that we look after also. And several people now have several bank accounts and credit cards. So it's important for you. What you're going to do in this list is actually going to prepare you for a good file to be handed over to your accountant, because the lesser work they have to do, the happier everybody is. So the first thing is to make sure you tick off all those balances. Don't think, make sure. So you go tick off, you download those PDFs already, create a folder called End of Financial Year, and then plug that all in. Just push it in so that when any accountants ask you, are you ready? We're going to do your tax return. It's not then that you're going to have to go contact the bank because 9 months gone past and you no longer have access to those things. So first thing, make sure your banks reconcile and all the credit cards are downloaded in that folder and it prepares for you to send it to the tax accountant. That's number one. Number two, the accounts payable. So very often we'll have files given to us mid-year, and we'll have bills that was owed in 2019, 2016. I was like, that's odd. I'm pretty sure they paid it. So the goal is to make sure that you review that list. Most likely people have paid it, but it's been not allocated correctly by the bookkeeper at that time. So make sure you review your suppliers list, your accounts payable, that everything is actually right. And if it's things that you've paid for and you haven't cleared into your books, just make sure you do the data and you close it up and you know you're done, because that gives you a deduction. All right. So it's important for you to do all those things right. Accounts receivable. So at the moment, I can see that a few of my clients that have joined me this year have a large accounts receivable that they're not going to recoup the money. They are trying. We've gone through a few things, debtors, debt collectors, and other things. It's not going to be recouped. Now is a good time to have a conversation. If you have a bookkeeper or an accountant or yourselves, am I going to get paid? Will I recoup that money or not? So it's important for you to, if you're not going to get that money, to try and write it off. Do it prior to the end of the financial year. Saves the accountant having to ask you and stop and delay your tax return being done, because it's the back and forth can be prevented if you're actually doing all the checks yourselves, and then it's a clean account to give to whoever's going to do your tax return.
And the reality is, if you've got an accounts receivable that you've generated, I mean, and again, this is not accountant advice, and Rafi can correct me if I'm saying anything wrong, you're going to be paying, it's going to form part of your profit, and you'll end up paying tax on it, and tax on money that you haven't received. So having an accounts receivable. So, and look, unfortunately, team, It's the cost of doing business, and whether it's in real estate or any other business, bad debts and bad customers who don't end up paying you is part of business. It's just like if you're in a retail store, part of business is shoplifting. It's just part and parcel, and you need to account for it.
Correct. It's important that you do take the time to do those elements, because I know life gets busy. We all do. Just take 5 minutes, print it, have a look. I mean, Zero, Marble, QuickBooks all have those reports easily available. Print it, have a look, circle those things that you know it's not going to work, push it to the bookkeeper and go write off bad debt. Very easy. Or if you're doing it yourself, talk to the accountant when you're sending your file saying those particular invoices will not be paid. So then they know what to do for you. The next one is the chart of accounts. So the chart of accounts really, it depends on the industry. In real estate, some things you need to double check to make sure it works. For example, your marketing, a very, very important critical element in real estate. Try and always separate your business marketing versus your vendor paid advertising. All right, the client advertising, because you need to know that you've received the funds from the vendor and you've spent it accordingly. So mixing them both, the files that I get during the year, I can see that there's no clear delineation on what's happening. And if you don't track this is a money bit. Like a lot of clients says to me, I don't know where my money is gone.
Yeah,
So
Rose, can I just say this? If you take anything away from Rose's presentation, is making sure that you get on top of your vendor, distinguishing property marketing that you should be collecting from vendors, and or if you've contributed to property marketing, that ends up being part of your variable costs. And for some people, they allocate $500 or $1,000 per sale on vendor paid or contributed marketing. It's got to be part of your costs, and then understanding the ins and outs of your business. If you just take that one thing away, get on top of that, it will save you a fortune.
yes, because what we find is for those who joins us, they are unaware of how much could be an overspent, and who's paying for it. So if you have several agents in the company, it's something that easily you let go and you forgot. I mean, the biggest save I did for a client in the last 9 years was $21,000. When we counted how much money that had gone over, she was shocked, obviously, having no knowledge of it. So we have a system here at Beyond Figures where we track the vendor paid advertising, making sure that it's on point and that we don't run into those big numbers ever again. So other things you can look at is making sure that things that you don't use under your charts get archived. Try and not have a general expense. Rafi will confirm an accountant do not like any general expense. They want to know what it is. What is it that you spent the money on? If you can attach your paperwork, Xero is a great product, Miles is a great product, QuickBooks is a great product. Keep your receipts and attach it in Xero so that the accountant can, if you've coded something incorrectly, can just make the change easily. Then that's not going to be an issue for them, and it's going to be time consuming if they have to. The profit and loss and the balance sheet. I'm quite worried sometimes that I put on a lot of new clients that never looked at a profit and loss or balance sheet ever. And I asked them, did you want to make money or not? So what was the goal? So the profit and loss definitely helps you understand the business. You don't have to be looking at it every day and have a panic attack about it. But on a quarterly basis, when your bookkeeper is running your BASes, for example, I will send you, when I'm looking at the BASes, I will send you your profit and loss and go, well done, good job, keep the good work, or oh, not so good, maybe review this. So those are the pointers that I'm going to give you, seeing many, many businesses, on what's the benchmark. As a real estate company, you're meant to be doing such. You're not. So I will try and guide you with, maybe you should book an accountant with Rafi and make you just book an appointment, have a chat, see where things are and when you can tweak things. Sometimes it's small things, right, that you have to review to show the bottom line. And Manos, again, profit is important. At the end of the day, it helps you continue going with the business. The balance sheet is more for you to look at where you are. And I had a very good accountant tell me something, which I'm going to say. He said the balance sheet is showing the wealth of the business, right? So what are you, tomorrow you want to sell, tomorrow you want to put it out there, you want to see how much you're worth. Your balance sheet says that. Your balance sheet says if you're doing well, what sort of assets you've gone in the business versus your liabilities and your cash flow in terms of how you're building on your equity, how are you going in that business. I know for a fact that having had many clients of mine go through refinance, restructure, and anything like this, the one thing the bank always rings me and asks, I want a copy of the balance sheet. Please send me the balance sheet. So at Beyond Figures, we make sure that this is always correct. And every quarter, I prompt anybody that bought anything asset-wise, please send me the paperwork so we can have it in file. And if anything, the accountant will ask us to. Last one, your payroll. This payroll has changed. This platform of the ATO and how payroll is done has changed, has done a 360 really. It's just huge. We used to have a piece of paper in an envelope that says this is done. You can go to your tax accountant now. In 2018, the government decided that they wanted to know then and there how people were getting paid for other services like Centrelink, Medicare, and everything. So they come up with the fact that we're going to push everything live. It did take 2 years to come to the portal and happen and make a lot of people were against it. But having done it for the past 6 years, I must say that it's really good. People have reporting on their portal, on the MyGov portal, as soon as we publish, which we used to call the group certificate. And in my office, I still call it the group certificate, but it's the STP finalization, where we push everybody's pay slip at the end of the year at 30 June. We've got 14 days that the tax office gives us to reconcile everything and send it to the MyGov, which everybody has access now to their own, so that they can go to the accountant and actually do their tax return. So single touch payroll, I guess, is morphing into something a bit more in July next year. And I wanted to tell that to the platform that there is actually going to be live super as from June 2026, where we're going to push the payroll, we're going to push it through the bank to the ATO, and also paying the super live within 24 hours. You have to push everything within, you know, at the moment, the law says 3 months. As of 1st of June, July 2026, it's going to be all of those elements live. So if you don't have a system and you're employing someone, you have to get to that. 1st of July, please get to a system that will do all those things for you so that you don't run into fines and everything like that with the ATO. The government has given us 6 years to get to a point where you can do that. It's critical that if you have not, that you do get, and Xero is as cheap as $35 a month if you have 1 employee. They're changing the subscription to include payroll as of 1st of June, because a lot of people complain that how do I pay so much money to subscriptions and I can't have a payroll. So 1st of June, payroll is live. You're getting super everything you can do on the platform for you, and all the reports below, checking the bank, checking the accounts payable, checking the receivables, the chart of accounts, the profit and loss, the balance sheet, everything is included in Xero. You don't need 10 different systems. Saves you on subscriptions. All you have to do is Xero, MyOp, or QuickBooks, whichever choice, whichever software you feel you're confident with. Go with it and reach out to us if you need help on setting you up. But definitely, I recommend you going on a software to help you have a smooth transition to what the government is doing in the near future.
Yeah. Love it, Rose. Absolutely invaluable. And can I just say, for everyone to be aware, the changes that are coming with the superannuation, I think are absolutely brilliant. So people are going to get their payment of super, and there's going to be less mistakes and people not getting their super, which is really, really important. So everyone's going to be more compliant. As a business owner, compliance is everything. And can I say the importance, and I understand, Rose, how few people actually know what their profit and loss is. And again, work out a simple system. And those people that have done business planning with myself know I use a very, very simple system to work out your profit and loss. Very different to cash flow. But again, if you understand that you're in the black and you're making a profit, you know how much, how the business is going, and you can make really quick calls on a 30-day basis. And the other thing that I recommend as well, have your buffer, have that emergency account. And a lot of new business owners, I recommend that you can save 3 to 6 months at least of fixed expenses. So if you had fixed expenses of $20,000 per month, see, your goal should be to save, between 60 and 120,000 in cash, to have free flowing cash in your business, to have those 3 to 6 months of fixed expenses floating in your business. And it's so important. And something that we should all mention as well, and superannuation at the moment is at 11.5%. It's moving to 12% of the 1st of July. So again, business owners, you need to be aware that change happens as of the 1st of July. And technically speaking, subject to obviously your employment agreements with your employees. Lots of employees will get a pay rise because of it, subject to their employment agreement. And of course, reviewing your costs, and we'll be talking about reviewing your costs base as well. And also the contribution, which I'm sure Rafi might talk about, has increased from 27,500 minimum or capped to the 30,000 as well on an annual basis. Can we give it all up? Any quick questions for Rose to ask? Just simply unmute, and we'll get Rose to ask any questions if it's to do with bookkeeping, if anyone's got one, or put it in the chat box.
Menos, I think it's a good point that Rose brought about the marketing. I was just looking back through my figures in 22. I spent about 180,000 on marketing and claimed and received 54,000 back from the clients. So I was in a hole of about 130,000 in marketing, and that's something that we really jumped on and with the help of Realty Assist, and we've really tightened that up now, where we're, just this year we've been paid 245,000 in marketing. So it's been a big shift for the business that we're not wearing that sort of money.
Yeah, David, that's absolutely invaluable. And for everyone to really understand that is an instant pay increase, a pay rise to the business owner without increasing your volumes. Like if you really understand, because that was coming off your bottom line, that 130 odd thousand, wasn't it? It's coming straight off your profit. So you had to sell probably 10 homes just to cover other people's advertising. So, and again, team, vendor paid advertising is critical for a number of reasons. One, obviously for the financial health and well-being of the business. Number two, better marketing for the vendor to get a better result. It works. We know that a great marketing campaign has a significant impact on the sales result. It just doesn't happen. So just be mindful. Thank you so much for sharing that, David. It is a critical one, absolute critical one, and it's probably the biggest saving a business can do instantly. Any other questions for Rose? So one of the points that Rose made, and just making sure that you do a overspend, underspend on the marketing for every sales campaign, right? Every sales campaign. But awesome. Okay. So off to our next guest speaker, and I want to say a very big thank you and welcome again, Rafi Sholmelian. Sorry, Rafi. It must be the Thessalonica time zone that I'm in. As I was saying, it's a blessing to be able to live in this day and age, to be right across the country, and we've got so many people from across the country and the world. But yeah. From Lombardi Partners, I know Rafi works with a number of our agencies as their accountant, but I'll hand it over to you. Rafi, welcome, and thank you so much for your time.
Thank you so much, everyone. Let me just get my slides working. There we go. All good? You can see that and hear me?
Yeah, absolutely.
Fantastic. Look, before I start cracking into this, I just wanted to say a big shout out to Rose and her team. Obviously, in my profession, I see a lot of bookkeepers and have worked with a lot of them. And I'm not just saying this, but Rose and her team are the best I've ever come across. And I think for those online that are here at this session, I think you're very privileged, and I'm very grateful. So I just wanted to quickly say thank you, Rose, because you do a fantastic job. So today's topic,
big round of thank you, Rafi, for acknowledging that, because
that's okay.
Obviously a lot of hard work goes behind the scenes, and we know, they're frantically working, they're dealing with invoices and the stuff that most people don't even want to look at, and it is a very detailed and such an important part of the business. So thank you so much for acknowledging, and well done, Rose. We love you.
We all do.
And the team, and the whole team, because there's 14 in your team now, Rose. Is that?
Yes.
Yeah, fantastic. Okay, over to you. Sorry.
No, that's okay. So the topic is 7 tax smart strategies that I think that businesses should use before 30 June 25. Now, it's not an exhaustive list, but it's just what I think are some of the key ones that we should all consider. So as Manos mentioned, I'm Rafi Shamalian. I'm a partner at Lombardi Partners. We're a Melbourne-based accounting, tax and advisory firm. And Manos, thanks so much for inviting me to speak today. This topic I'm actually excited to present because it's something I'm really passionate about. It is close to my heart, and it surprises me how many businesses either don't know about it or just don't do it. And that's something that has to change. Now, just a bit about us. At Lombardi, we typically service small to medium businesses and high net worth families. And over the years, I've been privileged to work with many real estate agencies right across Australia. And one thing that I really pride myself on is building strong long-term relationships. And I think that's really important. And I was contemplating just last night, I've been doing this for close to 30 years now. And in that time period, I've certainly learned to appreciate the real estate space. It's high pressure, and it's, how can I say it? It's fast moving, and it's people driven. And one of my agency clients told me many years back, they said, Rafi, you're the only candidate I've met that speaks our language. And that really sort of stuck with me, because that's exactly what I aim to do. I want to give you guys some clear, practical advice that can help you save on tax and make some smart decisions, obviously, to move your step forward. And as I said, it is a fast-paced environment that you guys work in. And because of that, I see this too often, that tax planning is it just falls off the radar. You're so busy, making deals, looking at new listings, managing your team, which is obviously, a big part of what you do as well. And before you know it, the year's gone and opportunities are lost. So I think today, it's really important we hit pause and we focus on these 7 strategies that I think really matter before 30 June. And these are simple, they're not complex. These are simple strategies that our clients that are successful, they use these year on year, and they do it to save their tax and, of course, to stay one step ahead. Now, the first one I want to talk about is prepaying business expenses. Now, if you're a small business entity, you can pretty much bring forward tax deductions by prepaying certain expenses, as long as the benefit or the service that you're paying for ends within a 12-month period and on or before 30 June next year. So, Rafi, in simple terms, what is that? It basically means paying for something now for something that you'll use in the future, but claiming the tax deduction this year instead of next year. Now, it's just a good way to lock in your savings early. Now, some good examples that you guys could use: rent on your business premises, insurance premiums, subscriptions, memberships, marketing or ad spend, and interest on business loans. Now, by way of example, this happened, I think it was last year. We had a client that acquired a rent roll and they funded it with debt. And I sought our advice as part of tax planning. They prepaid $50,000 of their interest in June. And because they qualified, they claimed a tax deduction that year. And of course, what happened is that they've brought forward a $12,500 tax saving. So again, it's just, as the catchphrase says there, smart timing turns future expenses into current tax savings. So just be mindful of those things that you can prepay. And if the cash flow is there, consider doing it. I would suggest if your business unfortunately has made losses, don't do it. Preserve the cash. The next strategy is on maximising super contributions, and it's something that our clients do sort of consider to reduce their tax, because that you can put money into superannuation provided it's within certain caps. And some of you may have heard about this terminology, concessional contributions, super caps. What does it all mean? Well, the term concessional, it's a strange one, but just think of it as tax deductible. So these are really tax deductible contributions that one can make. And for the current year, the limit is $30,000 per person. And that $30,000 limit is effectively what your employer puts in. And it could also be made up of what you could tip in to max out that cap. So I would say, ask yourself, have I used up my $30,000 cap this year? Because again, if you haven't, that's obviously a good opportunity to save on some tax. Now, it gets even better because if your super balance was under $500,000 last year, so this is at 30 June 24, and that's looking at the super balances. If you've got two super funds, for example, it's your combined balance. If your balance was under 500,000 last year, you might be eligible to use what they call this carry forward rule. And this carry forward rule means that you can contribute more than your 30,000. And in simple terms, it's basically looking at your unused caps for the last 5 years. Now, if someone hadn't, I don't know, let's say they're paid as dividends, but let's say someone's tipped nothing into superannuation in the last 5 years, they're not a salary and wage employer, they're not getting payments through SGC, that would mean that there's a maximum, I calculated, 137,500 they could tip in. And I had a client last year that used it because they sold a large capital asset. They made a very large capital gain. And as a result, let's reduce our tax. It was a good opportunity. They had the cash. They were, this client was in their 50s, nearing retirement. They obviously used the cash to put it into super and significantly reduced their tax at a good tax rate. So again, a very good strategy to consider if the cash flow is there. Now,
and Rafi, you don't mind me, that's the first I've heard of that. So we're always learning something new. So I wasn't aware of the carryover. That's amazing.
No, it is a good one.
It's a fantastic one, especially for people who have just started new businesses who normally don't take any salary or very low salary and contribute very little to their super in the first few years of their business. They can do that catch up in year 4 or 5 when the business is a lot more profitable.
Correct.
Which saves them even more money on the tax side of it. So
exactly. And it's just weighing up your situation every year, because the advice that a tax accountant can give you 1 year can change year on year. So it does depend on the circumstances of a business. Again, if you've made losses, it may not be feasible to be doing that. Park that. Maybe next year you're profitable. There's an opportunity to catch it up. If your mindset is to boost your retirement income and to put money into super because you believe in that strategy, then that can certainly help you. Now, we're not licensed. We can't give financial advice. We can't sort of tell you should contribute into super. We can't tell you how much you should put in. But what we do each year is that we check how much cap space you have left. So how much of your 30,000 is left? How much can you contribute before 30 June? We can confirm the eligibility of that carry forward rule that I discussed. And of course, we can model different tax savings based on different contributions that you might be willing to make. And a simple example is we had a client, these are all real examples, earning around $180,000. This client put in a $50,000 contribution into super, and that was maxing his current year cap. And it was using a little bit of his unused caps from prior years, because obviously that was the quantum that he wanted to contribute. that saved him in that particular year $11,500 of tax. And that's tax at his outside of super and within super. So you need to sort of consider that. And of course, his super balance grew by 42 grand. So again, what you're really doing, as the catchphrase says, is shifting money from potentially a 47% tax bracket into a 15% one. So again, if you can make use of tax savings that the government allows us to do and the cash flows there, and you want to build your wealth and get money into superannuation, it is something you can consider. Because just keep in mind, superannuation is currently taxed, like earnings within a super environment, they're taxed in at 15%. So if you've got an investment portfolio of shares, rental properties, whatever it might be, outside of super, and let's assume they're positively geared, you're paying a lot more tax. But yes, you got access to the money. Within super, it's obviously the earnings are taxed only at 15%. But the beauty is once you retire and you can start a pension, the earnings then become tax-free, obviously up to a pension balance of $1.9 million. So again, some good strategies that people can consider and use. Now, this one sort of follows on from that theme a little bit, and it's just to pay your superannuation before 30 June. Now, most of you in business would realize that, Rose and her team would typically make you pay your superannuation on a quarterly cycle. Every quarter, the superannuation is calculated, and in 28 days after the end of a quarter, you've got to pay it. Now, one thing I would stress, it's not part of these notes, but I just thought about it now, and I want to mention this, is that a lot of people aren't aware that if, let's say, their business is experiencing some financial difficulty, paying your super is probably the most important thing for you to do, and on time, because if it's not paid by the 28th day of the following month, it's no longer tax deductible. Something people don't realize. So always prioritize paying your superannuation on time. If you're struggling with super and BAS, I would always say pay your super. The tax office, yes, put a payment plan in place, get that paid over a time period. So I would say that the point I was going at is that you've got to pay it 28 days after the end of a quarter. But as part of tax planning strategy, what you should consider doing for the June quarter only is bringing forward that payment. Instead of paying it on the 20th of July, pay it before 30 June. Because super is a strange one. It's you claim the tax deduction on a cash paid basis. So if you can hit that before June, you get the tax deduction this year instead of waiting for it next year. So again, you're bringing forward your tax savings. I would suggest, it really is, as I said, the same amount of money. It's just smarter timing. Now, one tip I've got is don't leave it till the last minute. Super funds will typically put out publications and saying that, look, it's a very busy time for us, and pay super early, make sure it's got enough time to process and clear through our systems, because just you paying it is just the start. It's got to actually clear through the clearing houses to land in the client, your employee staff's super funds in order for it to be deductible. Simple example on screen is we had an agency we work with. They paid 20 grand of super that was owing in June to their staff. They paid it well in advance on the 24th of June. It landed before 30 June. That's a $5,000 tax saving. You've brought forward a $5,000 tax saving. So again, cash is important. Just for acting early, you can bring forward some tax savings.
That's great advice. And I love that quote. Same amount of money, just better timing, smarter. That's brilliant. Brilliant.
It took me a while to come up with that one.
Yeah.
Now, number 4 is a very technical topic, but I'm going to keep it light. And it's don't get caught by Division 7A. And this is really relevant if you operate through a company structure. Now, some of you may not have heard of it, and that could be a good thing because you don't have exposure, or perhaps it's a bad thing because you don't know about it and it's something that's waiting there to bite you. So Division 7A is something we see a lot, unfortunately, with new clients that haven't had good advice. And at the end of the day, they've taken money out of their company, and it's typically to cover personal expenses, or maybe it's some sort of informal drawing that they're doing. And it feels harmless because at the end of the day, it's like, hey, this is my money, right? But that's where it's different. It's not, it's the company's money because it's a separate structure. Now, If that's not documented or dealt with properly, the tax office will treat those drawings as a Division 7A dividend and tax it at 47 cents in a dollar. So not something that you want to experience. Now, as I said at the start, it is a technical topic, but to keep it simple, if you've pulled money out of your company and haven't structured it properly, the tax office might treat that as income. And of course, it could cost you a lot more than what you realize. Now, the good thing is that if you catch it before 30 June, there are options. And I've set up there in the bullet points, you can put in place a complying loan agreement. You can repay all of it or some of it, depending on what's left outside. If you haven't spent it all, maybe it's sitting in your offset, you can maybe inject some back in. Or we can pay back some of it by a dividend. Now, typically when you've got a company structure, you've got a shareholder. And if you've got good advice from the start, that shareholding entity should be a trust. So you might be able to direct that dividend into the trust and then into a lower tax member within your family. So a simple example there is a client that came to us. They had about I think it was $80,000. They pulled out of a company. They had no idea that that was a problem. Obviously, we caught that in time. We educated them. And as Manor said at the start, education is so important. It's something I love doing. Many clients that are real estate clients, they've come to me and they haven't understood things, and that's okay, because my goal is to make sure that you do understand it, because you're a responsible business owner. These are things that you don't need to understand the technicalities, but at least have some simple understanding, because then at least you know, hey, if I do this, it's a problem. If I do, what do I do? Let's call Rafi, let's call my accountant, let's get a resolution on this. What's this going to cost me if I'm going to pull out $80,000 from the business? Now, what we did in this situation of the $80,000 drawing is that the client was able to pay some of it back, and the rest that they couldn't pay back was declared as a dividend out of the retained earnings of a company to clear out that loan. That dividend went to the shareholding trust, and then from their trust, they had their spouse that was on a lower tax bracket, were able to distribute some to the spouse. I think some to the adult child that was earning much income as well. So instead of paying 47 cents in a dollar, they paid significantly less. So again, it is just being smart and understanding what this means. I would say
Rafi,
yeah.
I was sorry for interrupting, Rafi. My business partner is getting personalised number plates on his new car, and it's Div 7A on it. I think you hit the nail on the head when you said that a lot of people are unaware because they haven't. Their account has not shared the implications of taking money from the company, thinking that it's theirs. So, and that is a big challenge. So financial education and discipline is having that understanding that you might have $100,000 in your bank account. You just simply can't take it and use it because it does trigger these things. And as you said, it is a very technical, and you really need to be an accountant to understand it more so. But yeah, invaluable, absolutely invaluable.
Thanks, Manus. No, I agree. I would suggest to conclude this section, if you have taken some money out of your company or you suspect you have, now's the time to ask what's sitting in my director's loan account. Reach out to Rose, ask the question, reach out to your accountant. Okay, don't wait till it's too late. Now, this strategy number 5 is to lock in trust distributions. And unlike Div 7A, this is more relevant if you operate your agency through a trust structure. So a trust is typically a discretionary trust, maybe a unit trust or a family trust. If you're operating from this type of structure, the profit has to go out to your beneficiaries, and you as the trustee, you've got to determine before 30 June, who is the profit to be distributed to in my family group. And you've got till 30 June to make that decision. Now, the tax office does require a signed resolution before 30 June that documents that resolution, and that's really important. If that's missed, the income could be taxed at the top marginal tax rate of 47 cents in a dollar, irrespective of what your intentions are. So what we do as part of tax planning is that we look at any trust that may exist and any profits that may exist, whether it's trading profits or maybe in the prior example, it's a dividend coming through to the trust. We look at our clients' results, for example, with the assistance of Rose, as she said, we're working hard to close off figures for the months of March or April. We'll ask questions of clients to try and extrapolate the profit and their results till the end of June, work out their tax positions, advise them on tax strategies, advise them when those taxes are likely to hit, what is the cash flow implication, weigh up different scenarios, and of course, with the client, choose the outcome that's best on their family tax position and obviously their cash flow needs. Now, again, run the numbers now. You know, this is something you've got to do in May and June. And if you don't, you know, the boat's gone quite often. Strategy 6, you've probably all heard of this before, and it is to take advantage of a $20,000 instant asset write-off. And this was eventually just recently legislated, believe it or not, so which is good, good news. But it is again, it applies if your turnover is under $10 million, and you know, you can claim an immediate tax deduction for assets that are eligible that are under $20,000. Now, that asset's got to be first used or ready for use in that FY25 financial year, and of course, used for business. Now, one thing that I wanted to mention, or two things that people aren't sometimes clear on, is that it is exclusive of GST. So if you are GST registered, like many of the listeners probably are today, it is under $20,000 exclusive of GST. So the tip there is, and I've seen one client make this mistake many years ago, is that it's got to be, in simple terms, $19,999 plus GST to qualify, because it's under 20,000. So don't be like that client that bought an asset that was 20 grand plus GST, and then was scrambling to try get an outcome on it. The other thing I'll say too is that, you know, this could be typically used in your business on assets like your computers, you know, photography equipment like cameras, signage and office equipment and furniture. But one tip I'll give too is that it's not an immediate 20 grand refund. Okay, just remember that. So if you're operating through a company and you're spending the 20 grand, you're getting back 25 cents in a dollar. So my advice to you is, don't be frivolous, be smart. Don't just spend money for the sake of it. Don't be going, oh, the instant asset write-off may end at the end of this. It might be finishing on 30 June. Let me buy something. Just remember getting a proportion of that back. So make sure it's an asset that maybe you've planned to buy in the next 2, 3, or 6 months, perhaps. It was something you're thinking about buying. And if there's value in that asset within what you do in your business, then consider bringing forward that purchase in June. Make the retailers happy, and obviously you can get a tax deduction on that. Point 7 is to review your business structure. Now, this one's important for everyone, but it's, as it says, as I say at the top there, it's not a tax deduction, but I think it's the most important strategy of all. And if you're new in business in particular, or you are thinking of, you're an agent and you're thinking of going in business, getting advice at the start to set up your structure is gold. It can be very expensive and sometimes not feasible to unwind a structure if you've been operating for many years and you've got retained profits. So I would suggest that getting the advice now is really important because it will hold you back. And common bullet points I've mentioned here is, you know, things that we look for is maybe, you know, your shares are held through, if you're operating through a company, maybe your shares are held individually and not through a trust. Maybe there's no personal protection around assets that you own. Have you got advice if you're running a business who should own assets moving forward, such as your family home or subsequent investments? You know, you could really limit the flexibility for future growth and succession and ultimately exit. And I've mentioned there, it can create tax problems, inflexibilities. So again, your structure should ideally support your goals and not hold you back. This one is really important. I can't stress enough. It is worth spending the money to get advice on it. Hopefully many of you have got the right structure set up from the start, and that's fantastic. But I would suggest that this is really an important thing that we look at for all new clients, because the devil's always in the detail. So there you have it. They're my 7 practical tips, should I say, that people should consider acting on before 30 June. And if you've been listening carefully, there is a common theme here. It is timing and planning. And Manos touched on that right at the start. It is all about planning. Being in business is a responsibility. Plan and time these things to work things to your advantage. And really, the most successful business owners, they're not waiting till their tax returns are due. They're actually making decisions now. They're asking the right questions in May and June. And they're looking at how the business is currently run to make sure that these decisions align with it. So again, if you're running a loss, some of these things might not be too relevant for you. Understanding where you sit is really important. None of this is taking shortcuts. It's obviously using the rules that exist and making sure that the use of these rules can lead to better outcomes for us. So, at Lombardi, what we do is we work closely with agency owners all across Australia. And really, it's just helping them make smarter decisions around tax, business structures, and long-term profitability, because at the end of the day, it is our legacy. It's what we're working towards. We've gone into business because we're passionate, we love it. And yes, we'll all have our challenges and ups and downs, but at the end of the day, it is something that, you should truly be proud of and always be striving for improvement. So I think I'd just like to thank you for this session. I hope you've got some insights out of it. There's a QR code on the handouts if you want to take my details. They're up on screen as well. Very happy for anyone to give me a call and reach out. I'd like, if I can point you in the right direction, that makes me a happy man. So thank you very much, Manos.
Yeah, thank you, Rafi. That was excellent, team. Highly recommend that you take a screenshot of that, scan that QR code. Rafi, absolutely invaluable. I have heard so much of that stuff before, but there were so many points in there that I hadn't heard of. And again, it's invaluable to understand that we need to be on top of these things. I mean, the rollover on the super concessions and so forth, absolutely invaluable. So can we give a big shout out to Rafi, play a virtual round of applause. Andy, you've put how are you, buddy? How you doing? Fully vouched to partner with Rafi and Rose Combo in your business. They've changed my business world and they work together beautifully. Thank you to both of them.
Thank you.
I think no better person could say that as well, Andy. So you're a legend. Thank you. Rafi, really enjoyed that. Really, and I know tax and accounting isn't everyone's favorite topic, but I love it. So really well,
Manos. Thank you.
really well done.
Yes.
Thank you. I really appreciate it. Thank you so much for sharing. And now coming into one of my favorites as well, Miss Fiona Blaney. How are we?
I'm
so
awesome.
glad you loved the Div 7A plates that Arthur's going to put onto his.
I knew as soon as you said that, I thought I can see Arthur's going to be burning through Frankston with his Div 7A loan. And you know what, Rafi, I think you'll agree with me that is not going to be a beacon at all for the tax department. They will not think twice about those license plates.
Maybe he's bragging he's defeated it.
Maybe.
Yeah,
I
absolutely.
But
love it.
it's funny, as Rafi was talking today, I've been doing this a long time and I've met a huge number of accountants, and probably one of my favorite topics, because I love numbers and data, as everybody knows, and one of my favorite topics with my clients is actually this whole concept of a Div 7A loan and the director's loan that sits in this set of accounts, because you can have and I'm happy to say this, Rafi, because I know you probably won't want that on the recording, but I'm comfortable too. And that is that so many of my clients, hypothetically saying, in case anybody's listening to this, have unknowingly ended up with a Div 7A loan that hasn't taken the formation of one in so much as having the formal agreements and so forth. And they've done it because quite often we go to our accountants and the accountant will say, oh, let's do your tax management, tax planning session. Let's have a look at how we can minimize your tax position this year. And so some of the ways that you can do that is through this kind of planning. It's a strategy, but I will say it is definitely not the strategy for everyone. And so I actually think that it's the sexiest topic because it's the topic that you get really unstuck with, and people don't realize the implications of unwinding a Div 7A loan if they've got one there. And, you know, that client that you worked with that, you know, was 80,000 and you were able to minimize that. Like you said, you got to that just in time. But there are people that have these kind of loan structures that are in the hundreds of thousands of dollars, and that money has already been spent and there's nowhere to get it back from, and you're in a real pickle. And so I would recommend that everybody, when they go to their accountant, you know, coming up to the 30th, and I absolutely adored your presentation because whilst you said, Manos, there's things that we've heard, I think it was the methodology and the structure and the storyline by which you told it that made it easily or more readily understandable. And so go to your accountant, and if it's not, you don't get the answer, you won't go to Rafi, because you need to know if you actually have a Div 7A loan, or if you have funds sitting on your director's loan, and get them and make them tell you what it actually means, and ask why 4, 5, 6 times, not 3 times, because you can end up in a lot of trouble and the tax accountant or your accountant is not paying that bill for you, you are.
Yeah.
Sorry,
And,
hashtag got a little bit passionate there, but I see
no,
it all the time,
no,
and it's very concerning to me.
Concur with you because we see it so many times, and we've been a party to not knowing. We've been in business for 40 years, so we've come across that. And the best thing, a lot of the times people don't realize about their Div 7A until they actually change accountants. They go to a new account, and then the new account goes, hey, we've been doing about, and the first they go, what's a Div 7A? Do you know what I mean?
Yeah, that is exactly how it happens.
Yeah.
And that I see most of the time, which tells me that anybody online today who's sitting there thinking, I don't know about that, I don't have one, there is every potential that you actually do.
Yeah.
You just don't realize that that's a gift that you currently have been getting.
Yeah. So it's a simple email to an accountant, to your current accountant, say, do I have a Div 7A possible, or whatever. But
went to a session today, heard about Div 7A, do I have one? And then see what that
yeah, exactly. So again, Fiona, thank you so much for presenting today. Fiona has got obviously ARIC PM this weekend. She's given of her time today. I can't thank you enough, Fiona, because I know how valuable, and obviously you'd be under the pump. How's it looking? You excited about ARIC this Sunday and Monday?
Yeah, well, look, perhaps unbeknownst to you, we haven't spoken for whilst you've been away. I've not actually put the program together this year. So it's a whole different world for me going on to the Gold Coast this weekend and into the unknown. And I'm going to be emceeing the PM breakout space, and I'm doing my keynote, which I'm very excited about. But I'm quite fresh in terms of what the rest of the happenings are, and I'll find out with everybody else when we get there well, I'll be there early. I'll find out a bit earlier, of course, as the MC, but it's an exciting time just getting to see all my favourite peeps again.
Yeah, love it. Well, I mean, obviously we can't make it this year, but a number of our team, Joe Morris, our GM, will be there. So I know she'll be catching up with a lot of you guys there. So
yeah, we'll have a booth. Come past and say hi, Joe.
Done. Over to you, Fio.
Thank you. So look, thanks for having me today. Obviously, numbers is one of my favourite things. So end of financial year is a very exciting time. In my family, we say that the 30th of June is our favourite day. We actually, when we got our dog by happenstance, he was born on the 30th of June. So for us, we feel like Sir Thomas is this little living reminder of all things finance and what we all need to be aware of as he's running around. The kids like to celebrate his birthday. We like to celebrate tax time. So in terms of that, I want to make sure that you guys are all prepared from a number of points, not just obviously we've talked about the bookkeeping side of things. I'm going to touch on that, maybe a little double over. Rafi mentioned, of course, his incredible soiree around tax minimisation and things to look at. For me, I'm going to get into a little bit more nuts and bolts of some of that kind of behind the scenes back end stuff that we need to really focus on as a business, right? So I think the first thing for me is the reason that I like the 30th of June, not just for the tax point, but I love lines in the sand, right? I like trigger moments. I like calendar moments. I like things that say to us, hey, you know what? This date is really important. And here's a checklist. And guess what? if you don't get it done by this day, boom, 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 it's going to cost you a buttload of cash. And so that to me tends to be a little bit of a motivator for my clients to actually get done what they need to do. So to that end, I want to take you back on a little journey from where we all met earlier in this year, and we were talking about all the dials, right? This is all the funky numbers, the sexy data that we look at, that we say, you know what? We need to actually have a look at what this is going to be for us and how it's going to work. Now, if you bear with me, I am sorry because I am on such a roll here and my computer for some weird reason has done something. Can you just hold for 2 seconds? Talk amongst yourself about how much you love the 30th of June and go.
No, I totally agree with Fiona. That line in the sand, I use it all the time in so many. It's a refresh. Even the first of the month, looking at the end of the month and seeing what our sales are. And everyone knows what my favorite numbers are. Appraisal to list ratio. That is my favorite number. If you do not have that as a sales agent, you need to know that. But line in the sand, it's perfect opportunity.
Thank you. Sorry about that. Something weird just happened there with my technology. So when it comes to all of these data points and all of these dials, last time we met, whilst I showed you these dials, we're going to come back to it. I also talked to you about this beautiful periodic table of property management and business numbers. So if you don't have a copy of this, I'm going to give you my a QR code at the end. So I will just send you all one. It's a printout, right? And it is all of the numbers that we should be measuring in our businesses, or could be, okay? So people would say, if I was going to measure all of these numbers, Fiona, I'm going to need a staff of 25, or maybe you just need Rose, but anyway. So when we look at all of these data points, it's all about understanding the triggers for improvement, okay? So say, for example, in my BDM team that I was just working with yesterday, when I was looking at their data, we're trying to work out how we improve growth, right? So as we're coming into end of financial year, we are reviewing all of the numbers for the last 12 months. And then we do those numbers same time last year. So what happened last financial year? What's happening this financial year? What did we forecast was going to happen? Did it happen? Did it not happen? And why? Now, what I'm talking about here is, of course, you can just go top line numbers, bottom line numbers like, oh, I don't know, some basic thing like how many did we get and how many did we lose? Okay, that's great. And you need to be doing that at the absolute bare minimum. Like that thing's like getting a couple of hours sleep a night or making sure you drink water and brush your teeth, right? If you want to go to the next level and start making sure that you've eaten all the food groups, let's call it, then what you're going to do from there is you start going what I call behind the number. So this is the number I had, but what does that mean? Okay, what does that number mean? So when you see, here's how many new managements I got, here's what I made inactive out the door, here's what my current rental amount is on average per week, my current management fee, et cetera, right? All of those, hopefully the data that based on our last session, you're starting to identify, report on and keep. But what you're then doing is asking why. And a little bit of CSI, you get to play law and order with your red string and say, okay, so this team is an example I was working with this week. The call volume gone through the roof, right? We are like 33% up on our call volume. Fantastic. But hang on a minute, call volume's up, face-to-face appointments are up, but we're not converting. Okay, let me have a look at that. So then I go behind the data, and this is what you've got to assess at this time of year. Now you're saying, Fiona, we could do this anytime. Yeah, but guess what? Rose and Rafi want you to be doing budgets. They want you to be forecasting what activity and the result, the financial result across PM sales, everything that you're going to be aiming for. So you might as well make sure that what you're budgeting for is actually able to happen. And any of the activity changes you need to do within your business activity data in order to achieve those. Otherwise, they're just nice ideas. You're going to put the wrong plan in place. You're not going to actually trigger the right changes, and you'll keep doing the same things. So by way of example, and not to rat on local agent finder, but in this particular market, what we worked out was, yes, absolutely, our appraisal rate has increased. But when we go through and I've got the business owner saying our conversion's down, we're not doing as well. Okay, that's great. But hang on a minute. We've done X appraisals, X minus, what was it? X minus 30% have come to market. And then of the 30% post-market, we're getting 75% of the properties that actually came to market, we were achieving. So I say to that owner, hold up a minute. We're not working on conversion. Conversion's cool. We're at 75% conversion rate. I don't know about you, but I'm pretty happy with that. And I'm not going to up 100% of my actions in order to go from a 75% conversion rate to 77. What I want to do is go back behind the scenes to see how do we get more opportunities inside the space and the vertical by which we're actually getting the conversions. Does that make sense for everybody? So at this time of year, when we're talking about looking at the finances and managing our fiscal responsibilities around tax minimization and bookkeeping and HR and all the things that we need to be doing, absolutely. But this is also a line in the sand to say, hang on a minute, what are we doing into the future? What did we do in the past? And start analyzing that data. And that's where that activity sheets and the dials come across with all of the people, the processes, the people, the revenues, the growth, your activity items, how that is all working across, the cost value piece. That's why I put that number 1. So thinking about now, what's changed with your time to serve? What's changed with your cost to serve? Have we actually seen a reduction in cost of service, but we've also seen a reduction in profit? Okay, well, then that means we must have seen a reduction in volume. We didn't? We've seen a reduction in cost of service. We've seen an increase in profit, an increase in revenue. What is going on here? And so you actually need to unpack that data, because what happens is, and this is what I'm about to share with you, is you will have potentially, and I see this in every business that we do financial audits for, there is an enormous amount of unrecovered fees, right? You just talked about marketing fees as being unrecovered fees. Open that vortex into your property management portfolio. I've gone into businesses, wait for this. This is going to make some of your head spin. I went into a business once. I worked out that we were over $100,000 with the unrealized fees. And you're looking at me going, what? And I'll tell you why. Because you have all these beautiful computer programs and you think that they are automatically charging all of these wonderful fees. But the system will only charge what you tell it to. And things happen along the way. We might transition systems. We might accidentally delete something. A fee gets data input into the wrong area. My classic one that happens in PM is the property manager has a problem with the landlord or vice versa, rental provider, renter, and says, hey, you know what? We'll cop the management fees for the next month, 2 months, 3 months, and they never go back in the system. And 12 months later, you've been managing that portfolio for free. Right? This happens. Kathy's scratching her head. It's right, Kathy. That's what we should be doing. And we should be looking at all of this data and saying, okay, hang on a minute. Let's go into our systems. I'm going to move to this spot now because we could talk about activity all day. But if we
Fiona,
move
can I
into...
just,
yeah.
sorry to interrupt, but can I just say what you just said right now? We've seen it in our business where we've got it on the lease, the management agreement to charge fees, and we haven't been charging the fees. And trust me, we're guilty of, we haven't charged a landlord for 6 months, 12 months. Yeah. And you have Buckley's chance of recouping that in the last 12 months. So it's a so what's the best strategy that you've seen in the marketplace, especially for the new business owners who are starting property management, to get on top of it early? Because when you're a larger beast, it's really much harder to get into. What's the best strategy to plug that hole?
Yeah, sure. So the first is that at the, obviously end of financial year, as you said, it could be too late, but as far as I'm concerned, if it's before the 30th of June, you're never too late, right? We've done a financial audit. We've identified this gap. This will be coming through. We're going to put it in so that you get it for your end of financial year tax minimisation as opposed to on the 1st of July, right? We're doing this to help you, Mr. or Mrs. Landlord. But in how to manage it, every month, there are triggers and things that we can audit to offset what activity we've done and what we should have charged. So things as an example would be, if you are charging letting fees, hopefully you are, then you would just print out a list of every single property that's been let for that month and cross-check to make sure that that letting fee is in the system. Then you would go through if there was advertising costs that were in there for letting, again, another opportunity to charge that cost. If you have fees around ingoings, photography, anything to do with that whole vacating process and the ingoing process, you can print from your systems a list of vacates, a list of ingoings, and cross-reference it. The big one for me, of course, is where there's no management fee in there. Again, you can print a list, generate a list from your system that will show you the current fees identified in that piece of software against every single property, and you can check that. In and around the additional fees and the unusual fees, things at the moment like tribunal, we're going to see a big upsurge in that from the East Coast agencies where we've had major tenancy changes. So we're going to see a lot more activity when it comes to tribunals and local court hearings. And so with that, hey, every time we have to generate a payment from the general account that is sitting against that chart of accounts for tribunal, if that's how you're making the payment out, because you normally don't make it from your trust, you'll make it from a subsidiary and then across. There's a list at the end of the month. Every single one of those clients should not only be getting charged for that, but they should be getting charged their tribunal preparation charge, their tribunal attendance charge, because property managers don't like to charge the client when they feel like the client is already suffering enough. But we've negotiated those fees. We're not a non-for-profit. These things cost money, and so the client needs to be charged these outgoings. So having these elements in place for the cross charges are really important. And sometimes what businesses will do is they'll throw in other ancillary incentives for their team members to make sure that these things are charged, right? And when you see how big they can get very quickly, and particularly in small business, right? If you're just starting out, $1,000 is a big deal, right? So you really, I don't think we can undercut how important those, those amounts definitely are. In terms of, and I'm going to come back to that in a sec. So for me, like I mentioned to you, it's the review, the budget versus actual, the business plans, the projects, where are we at? Have we financed those? Is there any adjustments then that need to be made because of that budget versus actual for the future? What's that forecasted business activity that we're starting to look at for 25, 26? And I think it's absolutely imperative. If you are not the numbers person, and if it's going to take you 2 hours to do something and will take a bookkeeper, literally 10 minutes because they're a whiz on zero, get them to do it in that 10-minute mark and pay for that. You will definitely save cash and make money in the long term, even the short term doing that. I also like to look at June as a halfway point to the calendar year. So you can obviously start seeing how we're tracking and I know we're fin year related, but I love working. I think in real estate, we work calendar year in terms of our activity. So looking at that as a business, what are those additional expenses? Rafi mentioned that I'm doing that right now in our business. We forward pay our super, we do all of those things as well. But also right now, it's time to do a bit of a compliance review across the activity on that portfolio also. So popping that in as part of that activity with your property manager so that when they're touching that client, they're actually looking at all of these elements there so that you're getting that client looked at regularly. I know some of the pieces of business have been touched on, but I also like to add in here from a HR point of view that you start to look at that annual leave loading. Small business, this can be a very big problem very quickly if someone decides to leave and they've got 6 weeks leave owing because you're going to have to pay that out. So we really encourage our businesses to seek out our teams to take leave so that you're using up that cost base from the person being on leave as opposed to because they haven't taken any, which sounds great, but I've had clients where in 3, 4, 5 years runs pretty quick. And if somebody's only taken 2 weeks every year, you're up for 10 weeks as a payout, and that can start to get very costly for a small business, which is
and
which
Fiona,
is obviously
one of the
concerning.
strategies that I know Rose encourages her clients to do is to have a separate bank account and start depositing money into there. And I don't want to get political and all that. I still don't know why governments actually don't create some sort of like a super fund for annual leave so that every employee has their entitlements. But from a cash flow management, it's so important because
Absolutely.
payroll is a huge expense. And annual leave is, technically speaking, 1/10 or 1 month of the year is contributed to annual leave. So it adds up. It's almost 8% of your payroll. So.
Yeah, 100%. And I think that I'm very conscious, even here in our own business, we're 16, 17 people in our team. There are certain delineations that I make across all our sets of accounts for all the businesses around that's not my money. The bank, the business, here's all I want you to think about, but money is this. Your business is not your money, it's the business's money. Your businesses, the business has its own money. If the business, which you happen to own, decides to give you money, it has responsibilities around how it can and cannot give that money to you. When I was at SME, I would even do things like tax would go straight into another account. I would take 25%, I think it was, of every dollar earnings and put it into another account. And it sat there and it was not my money. Because if you're running your account in any way by looking at your bank statement, right, that is also a cause for concern. I know Manos says cash is king, but you will think you have more money than you have. And if you run your business via your bank statement, you're going to be in a hole very, 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 very quickly. And that's a scary place. So like I mentioned to you, if we move on to the portfolio analysis, I'm just conscious of time for you all, looking at going through and doing this compliance across your portfolio and saying not just the financials, but functional. Okay, so where is that portfolio up to? It's a great line in the sand because things like tenancy review, which for us is rent reviews and lease renewals, outstanding work orders, these are all income producing or income expenditure items of service within our organisations, and annualised compliance, our annualised maintenance, and compliance management. Our clients want all their cash potentially to go out now, right? They don't want that invoice on the 1st of July if it could have been on the 30th of June, right? And that same thing applies for rent arrears, creditor invoices, general invoices across the whole area, and making sure then that making sure that we're speaking to our clients and saying, like I just did with my one of my properties, the property manager rang me, she said, "Fee, all the insurances are due. We don't have enough cash because we've just paid out all the water bills, blah, blah, blah. What do you want to do?" And I said, "Give me the amount, I'm going to send you a check," so to speak, make a deposit, so that she can get that cost base out for me for this financial year. Otherwise, I'm paying up the 1st of July and I won't get the benefit. I want the benefit because that cash flow management is obviously going to be very important. Sending out client communication and preparation with your landlords. So talking to them about, is there any additional expenditure that you would need or like to do this side of the fin year? Again, that maintenance piece. I love the maintenance piece because you could even, if you wanted to, if you want some touch points with your owner or just a reason to call them, having a look at any maintenance items or updates that they actually did not approve previously and saying to them, "Look, I know you didn't want to do blah 6 months ago, but do you need any support right now with tax planning? And when it'll be beneficial if we got that underway before the 30th of June and paid for you." If your clients and you are not familiar with depreciation schedules, don't leave this with the accountants. Reach out to BMT. I don't know if you guys, who you advocate, but to me, the Brad and the team there are second to none. And then the final piece is, if you don't know how to read the end of financial year statement, you won't be able to explain it to your client. So please make sure that you know what's going out to your client so that they can, when they're making those calls, questions or queries, you already have an understanding of the layout of those, particularly for those of you that have, are maybe doing this for the first, second or third time. This might still be a little bit new for you there. And that's my big wrap. I think I'm on time, good to go. If you'd like to connect with me or you'd like some more information, you know, please, I'm absolutely here to help you. You know, the Black Salt Initiative to me is really, really important, and helping you all understand your businesses at the grassroots and how you can be better leaders and business owners. It doesn't mean you have to do it yourself. It just means it has to get done. So I'm here to help. Thanks for having me, Manos, Maria, and the team.
Thank you so much, Fiona. Amazing as always, and invaluable, obviously, information, especially when it comes to those invoicing, as we see it in so many, in our own business, those missing fees. And it's my biggest bugbear, making sure it really is. But what you mentioned as well, just have those simple processes. You do one action for a particular landlord, make sure it's in the ledger to be charged in our systems. And unfortunately, sometimes it's out of sight, out of mind. But
Correct.
this is why we're in business. I mean, Rose mentioned it at the very, very beginning. Why did you go into business? Is it just for the sake of having a business or to make profit?
Yes.
And 1,000, 2,000, 3,000. Always say, if you can save yourself $40 a week, $40 a week in your business, by whether it's timing, as Rafi mentioned, whether it's you know, obviously looking at those fees in your property management business, and $40 is not that much on a weekly basis, but at the end of the year, it's a ticket to Greece. I always look at it that way. It's a ticket to Greece. So it's more motivating than I'm just going to have $2,000 in the bank. Do you know what I mean?
Look, the way I look at it, Manos, is if I walked down the street and I saw $50, I wouldn't walk past it. I'd pick it up.
Yeah, exactly. Well said. Team, thank you so much. Guys, I know a few people obviously have prior appointments and so forth, but can we give a big wrap to the guys, a big virtual thank you for sharing their insights. Rose, Rafi, Fiona, it is one of my favorite sessions. There's no doubt when we do the end of the financial, because we're in it. And you were mentioning about numbers before. We did the exercise, and we use the 6 month, we use the end of calendar year, and we did a end of calendar year review, and we saved about 20,000 in our business in a monthly basis by just looking at those numbers, your appraisal to list ratios, all those numbers, and understanding what they mean. And we made some changes, and I'm telling you, it can really affect your bottom line. So, you know, as we say, if you fail to plan, you plan to fail. So again, thank you so much, Fiona, Rafi, Rose, absolutely loved it. And especially, and obviously those people that attended. Maria, do you want to say a quick thank you and a goodbye?
My video shoot is ended. My video.
Oh, good, fantastic. So, team, once again, Black Salt is coming back to you in June. We've got David Dwyer and Michael McClure for the Black Salt session. I think it's the 6th of June, I believe, and we're doing are we on track or off track? So really looking forward. Another favourite of ours with regard to your sales business. So looking forward to sharing insights from David as a business owner, and obviously Michael as an individual. I'll come to you. Yeah. Those people traveling to Arik this weekend, enjoy yourselves. Wish we could have been there as well, but enjoy, and love to hear your feedback and obviously the invaluable takeaways that you'll get from there. As always, we're here to help. Get onto your Black Salt's AI coach and keep using it. And yeah, any
great session today, guys.
It was a great session.
Phenomenal.
Yeah,
so many takeaways. Yeah.
So
thank you.
Awesome.
Thank you,
and thank you so much, George, obviously for being the IT behind all this, and Joe as well, managing the process in the background. From us, thank you. Thanks, good. Guys. And see you at the next session.
Bye.
Thanks again.
Bye.